The mortgage industry on the brink of collapse. Will mortgage lenders fail? The trouble is that lenders do not have enough cash reserves and they're going to need bailouts. There's a rescue package for mortgage borrowers and lenders. And finally, mortgage payments are going to be delayed up to 1 year for borrowers. Hey everybody, JJ here. You're watching Bull, Boom, Bear, Bust. It is Monday, April 6th. And real quick before we get started, I should mention that to my patrons, I just uploaded a report last night here. So if you are a patron, if you're interested, please head over to Patreon. This is a patron-only upload where I talk about a lot of stuff that I don't talk about on the channel here. So thank you for your support over there. Let's go ahead and get into the news right here out of CNBC. And it is reported here that the mortgage industry is on the brink of collapse. Now, why is that? Let's explain it in very simple terms. Mortgage companies and banks, every single one of them here in the United States, they loan out money that they do not have. I repeat, they loan out money that they do not have. First, let's talk about the too big to fail banks, the deposit banks, but that also includes smaller banks and credit unions. They have a fractional reserve lending system, so when they loan out money for car loans, for mortgages, even credit cards, they're loaning out money they do not have. That money does not exist, and that's why you see the existence of bank runs, which are also happening here in the United States. Certain banks are running out of bills, but back to the mortgage industry being on the brink of collapse, they are going to need a bailout, and I'll just read an excerpt here. A broad coalition of mortgage and finance industry leaders on Saturday sent a plea to federal regulators asking for desperately needed cash to keep the mortgage system running, as requests from borrowers for federal mortgage forbearance program are pouring in at an alarming rate. So here we are again. We have not learned anything from 2008. As soon as something throws a monkey wrench into the economy and people are unable to make their mortgage payments, the lenders need to be rescued. Now, just to be clear, the rescue operations have been happening for many, many months. We see it in the repo market now for going on 6 months and counting. So to answer this question here, will mortgage lenders fail? Well, the answer is only if the government lets them fail. And the U.S. government, who works hand in hand with the Fed, has unlimited currency creation powers. So they get to pick and choose the winners and the losers. So ask yourself, who are the money makers, who are the currency controllers, who are the currency creators going to allow to fail, and who are they going to allow to stay operational with unlimited bailouts? Now let's talk about the rescue package for mortgage borrowers and lenders. But the borrowers, their mortgage payments are going to be delayed for up to 1 year. Up to 1 year. And this is for GBMs. Those are government-backed mortgages. Let's take a look. The CARES Act mandates that all borrowers with government-backed mortgages, about 62% of all first lien mortgages, will be allowed to delay at least 90 days of monthly payments and possibly up to a year. So the borrowers are also getting forbearance on this. Now here's the thing, it's not really a bailout for the borrowers. Why? Because the borrowers are going to have to make these payments back at a later time through a payment plan, as it says right here. And servicers are granting the payment deferrals to borrowers with no questions asked, as it is required by law, but the servicers still have to pay mortgage bond holders. Okay, so it's pretty simple. It sounds complicated, but the Fed, they're basically going to come in and they're going to backstop the mortgage industry, right, to infinity. The banking system will not be allowed to fail. The mortgage lenders will not be allowed to fail unless they choose to let these lenders fail. And do you ask yourself, do you think they're going to let any of these mortgage lenders fail, or the depository institutions? All right, let's continue here. The coalition, which includes Mortgage Bankers Association, the National Association of Home Builders, the National Association of Realtors, the Independent Community Bankers of America, U.S. Mortgage Insurers, and the National Apartment Association, issued a press release Saturday saying the scale of this forbearance program could not have been foreseen by mortgage servicers or fully anticipated by regulators. It is therefore incumbent upon government to provide a liquidity facility for single-family and multifamily servicers. Any further delay could lead to greater uncertainty and volatility in the market. All right, so let me put that into plain English for you. They are saying that if they do not get bailed out, that there could be a massive drop in the real estate market. That means falling prices. So what they are trying to do is they're trying to keep home prices propped up. Because remember, if lenders fail, then demand fails. When people can't get mortgages, then home prices fall because demand goes down drastically. So they can't let that happen. They want to keep home prices propped up into bubble territory. And also, it's noted here that Mr. Cooper, the largest non-bank servicer in the nation with close to 4 million mostly government-backed loans, has already granted 80,000 forbearances, and the requests keep flooding in. So think about that, 80,000 forbearances. It's only been a few weeks since we've had this economic lockdown situation. Just like we've been telling you, it's going to be debt on top of debt on top of debt. All these new rescue operations, they're just going to be funded by money that doesn't exist. It's going to be printed into existence. And actually, the word printed is not even the correct word. This debt is just issued digitally. It's just numbers on a digital screen is all it is. Also, we talked about bank runs. Let's take a look at this article here. This is payments.com. New York City Bank runs short of big bills as customers hoard cash. So people are growing more and more wary of the financial system as they read the news about all these bank rescue operations, the bailouts, as they grow more and more wary of just the financial system in general. So we're already seeing certain larger denominated bills already running low at these institutions. And remember, with the fractional reserve system, they do not have the money available in their vaults to give to people. If everyone went and asked for all the money that they had in their deposits, the banks would not be able to give these people the actual paper cash. Right? So when people say, well, we're going to have a digital dollar or a cashless society, we're already in a cashless society. These banks do not have the physical cash there. Yes, they can print it up, they can type it up on a screen, but physical cash is already just a fraction of all the money that's in the actual system. Okay, headline here out of Politico: Washington quietly prepares for a bank rescue just in case. Well, this is supposedly big news, headline news out of Politico. We've been talking about it here for years now, that the banking system is insolvent. It's a fractional, fraudulent system where they get to loan out as much money as they want to, and the people at the top, they can take as many bonuses as they want to, while the average U.S. person, the working class citizen, usually ends up working most of their life just to continually pay off the debt, basically until the end of days for most people, unfortunately. All right, we're going to wrap this one up here. Quick check-in on the markets today. Dow Jones up over 1,000 points. Think about this, with 10 million people recently filed for unemployment, and it's only going to get worse. Why is the stock market up, right? The manipulation is so obvious at this point. Even a caveman can see it, right? So we are over 22,000 now. Just think what's going to happen if we see this health crisis start to decline and the fears start to decline. How high are they going to push this market? I could see easily 30,000 again this year in the Dow Jones if the health crisis continues to decline. Right? I almost hit my prediction of Dow Jones 30,000 earlier this year before the big sell-off. It was like just a few hundred points from the 30,000. And guess what? If it keeps happening here, the manipulation is going to take this market up. In the meantime, the real economy, which is the middle class, continues to be buried under more and more debt. And that's why people are going to need their mortgages forgiven for up to a year. Is this going to prevent real estate from collapsing and home prices? Is it going to prevent home prices from dropping? Well, we're going to talk about that in one of our next updates here. We're already starting to see sellers slashing their asking prices for homes. We're going to do a whole report on that here, so stay tuned. In certain markets, sellers are already slashing prices, and then we have data and statistics to prove it. So give us a thumbs up if you like what we talk about here. Come back for this update. Also hit that notification bell if you want to make sure that you do not miss any of our reports. And again, to my patrons down there, just check the link down in comments and in description, and it'll take you over to the latest upload there on Patreon, and maybe we can chat over there. Until then, thanks everybody for being here. I hope you are well and navigating these rough waters safely in this current environment that we're in. Bye for now.